the transfer agent? What do they do? What is the role of the transfer agent in corporate actions life cycle? Hello everybody and welcome to this video that explains in a very crisp and concise manner what is the role of the transfer agent. I'm a learning partner Sushila Hariharan. If you're interested in a career in investment banking, hedge funds, trade operations as well as OTC derivatives, you've come to the right channel where we focus on providing research focused, content centric videos on these topics. The transfer agent is an entity that is appointed by the company that issues different kind of securities to investors. What do we mean by these three terms over here? The first term, the transfer agent. So the transfer agent is external to the company. Okay, the transfer agent is an agent which is appointed by the company, and the biggest job of the transfer agent is to keep an updated record of all the securities holders. So that's the first term I wanted to explain about. The second term I wanted to explain about is the issuer. The issuer over here refers to the corporate that has issued different kind of securities. The corporate is normally a limited company. If it is still an unlisted company, then it's a private limited company. If it is a listed company, then its shares are held by the general public and a large number of widespread investors. The third term I wanted to talk about over here is securities. By securities, we talk about common stock, preference shares and their various varieties, DVRs, ADRs, etc., as well as the different types of bonds. These could be convertible bonds, non-convertible bonds, foreign currency convertible bonds, etc. So all these come under the term securities. So a combination of debt and equity instruments issued by the issuer, held by the investor, okay, for which there is a structurally fundamental change in the nature of the security, is called as corporate actions. Corporate actions is spread across a wide variety of actions which require aggressive participation by the investor, in which case it's a voluntary corporate action, which requires no participation by the investor, it is called as a mandatory corporate action. So every time there is a corporate action initiated by the issuer, the investor gets the benefit of or thereafter of that corporate action. Now, who is responsible for ensuring that the corporate actions are distributed by the issuer? It is the transfer agent. Who is responsible for ensuring that the corporate actions are collected by the investor? It is the investor's custodian. Okay, many people get very confused about the role of the custodian and the transfer agent. So let's be clear about the 5 different roles that the transfer agent plays. Okay, first situation, the companies has issued dividends on its equity shares. The transfer agent will calculate the dividend entitlement of each and every investor. How will the transfer agent know this? Every day the transfer agent will have the updated records of each and every investor and their shareholding. Okay, so therefore when the company announces, this happens because every day the shares are traded in the market, the seller sells the shares, it's transferred to the buyer's name, the transfer agent cancels the seller's name and adds the buyer's name as per the records of trade details got from the depository of the exchange to the transfer agent. So thus the transfer agent keeps an updated record of all investors in the company along with the number of instruments that they are holding. So for example, if Hari Hedge Fund has bought 100,000 shares of KH Inc., then the transfer agent of KH Inc. will cancel the seller's name in the record of shareholders and add the name of Hari Hedge Fund into the list of shareholders, into the records of the shareholders. Okay, so this is very clear. So the first thing is, once all the details are held by the transfer agent, In corporate actions, they have to calculate what is the dividends that every shareholder is entitled to. The transfer agent gets this data because A, it keeps all the records of updated shareholders as per its job profile, and second is it gets announcements of corporate actions from the issuer itself. Thus, it has to calculate all the dividends that has been announced by the company, and it has to ensure that it has therefore all the bank details, the IFSC code, the account number of each of the shareholders, and thereafter the dividend calculations for each and every investor. The second time when in corporate actions, when a transfer agent's role comes in, is similarly in the case of coupon announcements for bonds and for the fixed income securities. So when a company doesn't have to announce coupons because these are already predetermined, when the coupons are already predetermined and the date on which the payment is going to take place are already predetermined, then the transfer agent has to only transfer the coupon on the coupon payment date to the different bond holders and to the different debt holders. Okay, so unlike in the case of equities where there is an announcement of dividend, in the case of bonds there is no announcement of coupon because it's already been predetermined that the coupon will be at a particular rate, will be paid to the investors on a particular date. The third situation where a corporate transfer agent comes into picture in corporate actions is during a merger or an acquisition. In this case, if the transfer agent is acting on behalf of the selling company or the buying company, it's very important to know that. If it's on behalf of the buying company, if the transfer agent is acting on behalf of the buying company and the investor is holding shares of the company that is buying the other company, then they must know what is the swap ratio. This is very important for both the transfer agent as well as the corporate because they need to know how much cash payment has to be made. While this has absolutely no impact in the case of a direct merger or acquisition, in the case of a merger or acquisition from the seller's perspective, the selling company, if it is fully acquired by the buying company, then from the selling company's perspective, the shares have to be replaced with the acquiring company's shares. So in corporate actions, if it's a merger, the selling company's shareholders will be affected. The buying company's shareholders will not be affected if it is an outright cash transaction. Okay. On the other hand, if it is a stock swap ratio, also the selling company's shareholders will get stocks in the buying company's buying company, and therefore the selling company's shareholders only will be impacted, not the buying company's shareholders. Okay. The fourth situation in which corporate actions where the role of the transfer agent comes into picture is in the case of a buyback. Whenever a company announces a buyback, it means that it is going to buy back its shares from the public. When it is buying back the shares from the public, it could be any of the two situations: outright acquisition of the shares from the stock market, or on a tender offer, wherein they give tender offers to the investors to surrender their shares at pre-calculated prices as defined by the regulator. In this case, again, the corporate actions, the transfer agent's role comes into the picture because it is their responsibility to send out letters to each of those investors who are holding shares in the company that the company is interested in this buyback. So is there an offer for giving up your shares at a calculated price, at a predetermined price as decided by the regulator? So this is again the responsibility of the transfer agent. In the fifth situation, the transfer agent has to also do the entire calculations of all the issues of preference shares as well. In preference shares, as we know, the dividend rate is predetermined, but the dividend is paid out after payment of coupon to the bondholders. So in this case, the transfer agent has to also calculate the different types of preference shares whether they are redeemable, whether they are irredeemable. In this case, whether the coupon is to be paid, the dividend has to be paid and at what rate and so on and so forth. All of them have to be advised to the company. The transfer agent, in effect, acts as the sole transferor of assets of the investors, okay, from the seller's name to the buyer's name. And that's a very important role of the transfer agent. The transfer agent's role in corporate actions can never be undermined. It has to be absolutely updated information. There can be, with stock markets, rolling market cycle crashing, like it used to be T plus 3, then it became T plus 2, now it is T plus 1 in most markets in the world. Some markets are even exploring on T transfer itself, right? In such a case, the transfer agent's responsibilities and roles have just zoomed in the recent past. Thank you so much for watching this video.